Good morning, everybody. It's Chris here from Serene Education with the 4 majors and latest update for the 20th of July 2012. Hi guys, end of week. Let's have a look at what's happening at the pairs this morning for this Friday morning. Let's have a look at the daily on euro against US dollar. And what have we got? Another indecision day yesterday. Spinning top, doji the prior day. Geesh, a lot of indecision this week, guys. All upside favorite, but clearly now we're seeing a bit of hesitation, and after Wednesday's close, Thursday candle forming a spinning top. So what's happening? Well, we know clearly that there's a price support and resistance level roughly around the 123500 mark. Clear hesitation here going into July, the beginning of June, and then a bounce to the upside, and then we had a breakout just recently in the early parts of July where we saw price pulling back slightly and then heading lower to a price support and resistance level, which came in the shape of the 78.6 fib extension level here at the 122200. So taking the fib extension from this major high here that we saw in October of last year into the first part of January this year, up to the highs in latter February of this year, you can see the extensions to the downside now. So this move, you want to see 100% of that move playing out. You can see it's still in its infancy. 61.8 just recently been broken and price trading lower than that. So our next port of call would be the 78.6, and sure enough you can see quite clearly the 78.6 fib extension level here right on the 122200 mark being tested, and price finding a bit of support and moving higher. However, still being capped by that prior swing. Okay, very important here. You can see this hesitation area here, so I need to make a note of that. So that's the 3500 mark, so I'll make it nice and bold, okay, because that's now going to be our potential resistance area. Okay, price is clearly broken below that prior swing and headed low to a fib extension level. However, found a bit of support on that fib, a bit of a pause consolidation area here at 122200, and now finding resistance. It's finding a lot of resistance to the upside. It's failing to trade higher into this area here, which happened to be a price support. You can see the breakout here. We had a consolidation, and then we had further extensions to the downside because our CTC told us the sentiment was still negative, and most importantly, all our moving averages are above price, and overall the price is now broken through a major price support. Okay, this hesitation area. Okay, so now if it fails to continue to find resistance here at 123500 price support, this becomes a new resistance, and then we see the next extension to the downside. Remember, this pair is still very negative. You can see the overall trend on this pair. If I move right out, you can see the overall pair for this. If I just put a trend line above the top of this, very negative indeed. The institution moving average is well above price on our daily, and you can quite clearly see from April May of last year, 2011, price has been swinging lower. Yes, we've had pullbacks, consolidated pullbacks, price, but it's still capped by the institution moving average. Okay, September of last year, we've been trading below the institution since, and that gap has got wider recently as prices really started to fall with a lot of momentum. Okay, clear prices trading well below the institution moving average, and in doing so, breaking lower swings. You can see us a price swing, break lower, move back, failed at the same level before, and price reverses to the downside. So now here's another one. This is another swing area. Price is broken below that, okay, which happened to be a price support. Now it's got to find resistance here, and looking at the candle this morning in the Asian session, we're starting to see a bit of that happening. We're starting to see a bit an indication that we could see further negativity to the downside. If that's the case, then we should be targeting the 12200 mark, the 1220 mark, which is where we just come from. Break of that, guys, then ultimately we should be looking at our long-term target down here at the 12200. Why the 12200? Because on our weekly charts, our longer term charts, that is where price has found a major bounce before in the past. So if you look at a weekly chart of this, you'll know clearly that that area down the bottom there, 12200, not only a psychological round number, it is also a major support and resistance level for price in the past. So if we get below this 1222, then there's a good opportunity for price to fall, a lot more momentum to the downside, and we can profit on that to at least the major 1200 mark below us. Okay, so it's important that we are aware of those areas. So if we go to our 4-hour chart, for example, You know that 2200, there we go. That's our support at the moment, so price needs to be trading below that area to see any further extensions to the downside. Okay, so got to make a note of that. Price has to be trading below that area, and we could look for further lows. Then we know that 12,3500 above us is that major long-term price support, which could be potentially our new resistance area. Okay, you can see price spending more time below it. CTC, you can quite clearly see, even though we've had pullbacks along the way, the CTC on the other side on our 4-hour is still remaining red. So the overall sentiment, even though we've had pullbacks, the overall sentiment on this pair is still looking negative. Okay, and then look where the institution moving average is, guys. If it's trading below the institution moving average, then sentiment is still negative. It's got to be trading above the institution moving average to be positive. However, you can see quite clearly here back in the start of July, price is trading well above it. However, CTC histogram on the other side telling us no, this was not generally moving with the bullish sentiment that governed it to be moving this high. You can see quite a big move on a 4-hour. Covered a lot of ground in terms of pips. However, price wasn't really moving with that. The overall the genuine sentiment wasn't behind that move, and sure enough we reverted to the downside because the sentiment was still looking negative. Here we are in a consolidated range. Look at these past candles over the past couple of days. Very indecisive. A lot of wicks. Huge chunky wicks. Very little decision. We want to see some decisiveness from the market, and this indecision is coming out at the underside of a major resistance level. If this continues to occur, then the likelihood is we're going to see further downside sentiment, and we should be looking back towards this 12,200 mark, and ultimately way down to our 12,200 mark, which is going to be our major long-term support and resistance to the downside. One thing just to watch out, if you look at the hourly here, which I use as my entry candles, I'm going to put those 12,3500 mark in again, because it's important that you are aware of these areas in your intraday trading. And there's a 12,2200 below me. You can see price has been trading below that and closed lower. Okay, got to be aware of that. These little fake outs, wicks, and that's why you need a genuine candle breakout. Here, for example, not a really genuine candle breakout. A lot of momentum in that. You can see straight afterwards a lot of wickiness, etc. So it's important, especially to look for a nice juicy long candle. You're going to say to yourself, well, Chris, there's a good opportunity of me losing out quite a lot on the potential move. Yes, you will do. You will probably, I mean, between 12.15 and 12.20, there's 50 pips in that move. However, if you're getting a strong move in the direction of the trend, it's just indicating that the momentum is generally moving in the favor, and we should see long-term play out of further extensions to the downside. So on your longer term, stretching to your 4-hour, your daily, your weekly, that price actually moving low with a lot of momentum, and that's what we want to do. We want to catch the momentum when it's moving to the downside. Going into this 12,2200, notice price is starting to pull back, and in doing so we've had breaks to the downside, but you can see quite clearly price is finding a intermediate or forming an intermediate trend line to the upside at the underside of a prime major resistance level. Okay, so we have swing high, swing high, swing high, swing high, swing high, and you can see the institution moving average now coming into play a lot more than it was before. However, we're still capped or governed by this 12,3500 mark above us. As long as price is trading below that area, we should still be looking for negative sentiment. It's only once price is closed, physically closed above 12.35, then our change in market sentiment could ideally favor now potential the start of upside momentum. Until then, we should still be looking for that negative sentiment to reign. Okay, the RSI clearly playing tic-tac with the 50% line now going sideways. Look at the moving averages, guys, all squeezed together, not really giving us a lot of much to warrant looking. If this was positive upside movement, we wanted to see the 20 followed by the 50 plus the institution. Over here we have a total opposite of that with the 50, 20 and the institution very in the negative, and you can see prices just trading sideways because of that that indecision. So here, if we want to see a genuine movement to the downside, we want to see price trading below that 1222, that 12,200 quickly as soon as possible. And if this is to be positive, then we want to see ultimately this 12,3500 to the upside being broken. Moving on to sterling, let's have a look at this pair. A weekly chart, see a lot of momentum in this week, punching higher, heading up towards this 20 institution moving average, which we saw price recently back in mid-June finding resistance at. and you can see the CTC on this particular time frame mostly red on the candles. However, our histogram on the other side is very indecisive, a lot of red smattered with blue here and there. We have had the highs of May. If you take those highs to the June, let's have a look and see how the retracement has been looking. Just want to move it down slightly more. There we go. You can see prices heading into that 38.2, and if you go into the institution area, you're heading into pretty much that 50% area. The one thing on this page to really be aware of is that on our daily, we should be aware that 15,300 is a major support and resistance level. I'm looking at the weekly, and if I just pan out, you can quite clearly see that this 15,300 mark has been a major support for this pair over a number of years. Okay, 2 years in fact. So get below that, you can see quite clearly how there's less indecisiveness. There might be a bit of a pullback here at about roughly around about 14,900. However, down to these areas here at the 14,200 mark, ultimately you can see there's very little thing in the way to really hinder price moving lower. And you can see the institution moving average, guys, on our weekly still above price, still governing price, and as long as the institution is above price, then it's still looking bearish. Okay, we're seeing a consolidative trend in a bearish setup. We are being squeezed now between this major support here at 15,300, and you can see these highs are getting lower and lower and lower. So it's telling us that potentially price could be going into a squeeze. If this is to be positive, we need to see price trading well above 15,800 to give us indication that we should be looking for further topside. So if we go to our daily, let's have a look and see what's been happening on our daily. Make a note of that 15,300 because that's a major support and resistance level. If price breaks to the downside anytime soon, that would be our major target. Okay, that's where we'll look to take profit from long term. People selling in May all the way down to June took profit at this area here because it was a major price support and resistance level. Okay, we saw a bounce on that. Breaking through the institution, you can see price attempting prior highs before, however being capped by the institution moving average here at 15,700 on our daily. Price support, resistance, 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 and price moving into this area again, yet again for a third attempt. This is our first, second, and third attempt now at this area at 1575. It has to be physically trading above this area in order for this to be positive, guys. Notice the CTC on the other side on our daily. Even though we have a blue arrow, blue candle, the CTC on the other side remains red because we're still below an institution moving average, and overall the sentiment is still negative. Okay, we want to see price trading well above the 1575 or the institution moving average here. Ideally, a close above 15,800 would be fantastic for this pair. It would generally confirm that we are looking for bullish sentiment long term. If that's the case, then we could see price reattempting these highs here at 16,300 over the next couple of months. Until such time as price is trading above that, we should be looking for negative or bearish sentiment to creep back in again. Okay, we don't want to be speculative trading. We don't want to guess what the market's likely to do, so we don't want to be trading now, physically into a trade now, if we have a major resistance level above us. Okay, so intraday, that's going to pretty much hinder our movement to the upside. So if you look at any news out there, what do we have news-wise that might reflect on price action today? Well, we have a very important one, which is public sector net borrowing. Okay, for sterling, we're looking at the sterling pair. So public sector net borrowing figures are out at 9:30 a.m. GMT. If you look at the previous figure, we saw that net borrowing was 15.6 billion, and the forecast is 11.8 billion. So they're expecting less borrowing from the public. So if you think of it as positive or negative, you've got to have a look at the previous figures in that. So we look at June's figure, for example. Now the previous figure of May going into June was a negative 19.9 billion. So less people were borrowing. Okay, the forecast was for a positive figure of 13.6. So if we're going from a negative 19 to a positive 13.6, that's quite a lot. So that's telling people a lot of people are borrowing, and actually the figure came in at 15.6. So the actual forecast was squashed. They predicted a 13.6. There were more people borrowing. Actually, 2 billion extra was borrowed for the month of June. So what we're looking for is the actual figure to be less than the forecast. If it comes out less than the forecast, so in this case they're forecasting for this month the borrowing to be 11.8. If it comes out less than 11.8, then it's going to be good. If it comes out more than the actual forecast, that's going to be a negative for sterling against the US dollar. Okay, so if you see a bigger number than the forecast, then we're going to see sterling taking a bit of a hammering this morning. Okay, we could see a bit of a pullback. So if we go into our 4-hour chart, we want to place that 15,700 on our 4-hour chart. 15,700, there we go. It's above price as we speak. Make a note of it, make it nice and chunky, because that's our major support and resistance level on our daily. Okay, and you can see quite clearly price has failed to actually trade higher than that over a number of weeks. So we are aware of that. You can quite clearly see higher swings going into this, and just recently you've seen a move to the upside, and we had an indecision, a spinning top followed by a decisive candle. In the last 8 hours in particular, we've seen price pulling back nicely now at the underside of that major support and resistance level. Okay, so we have to see price trading higher than that. You can see the institution moving average on our 4-hour telling us that price is looking good for this time, for this setup. We have the 20, we have the institution before the 50, which is what we want, is the 20, the 50 and the institution, but it's still looking blue across the board. However, we won't be looking for any buying sentiment until we see price physically closing above 1575. Okay, we don't want to be rushing head tails on this because it says to us, listen, buy, so we just buy for the sake of it. No, we've got to see a genuine break and close higher, because we don't want to be all your smaller time frames. If we do get a buy set up now on our smaller 5 and 15 minute charts, you can literally scalp trades into the underside of this, but you have to be in and out quite quickly. Okay, for all you long-term traders, this wouldn't be a great strategy, because you want to be capitalizing a lot more from that, and give yourself a lot more, because your stop would have to be down here somewhere at 50.65, and you're ultimately risking far more than you're going to be getting back in return. So it's pointless going against that one. Hourly chart. Let's have a look at the hourly chart. You can see swing highs, institution moving average well below price, and once price got above the institution moving average, you can quite clearly see the 50% RSI here being broken, and price trading higher than that, telling us that sentiment was generally upside favoriting, and we saw price moving higher with a lot of momentum. That 15,700 is well above us. There it is, 1575 above us. So we know that that's a major support and resistance level on our daily, and as long as price trading below that, then we should be looking for potential momentum to look negative. If you look at these swings, for example, you can see we're swinging now into that, and prior resistance level at it's just above the 1565, 66, 67 mark. Resistance, breakout, and then we moved higher, but we're going into this area here, and you can see the indecision creeping in now. If price remains intraday above this prior resistance level here, okay, at 1567, for argument's sake, okay, make a note of that, guys. If price remains above that area, then we should see price reattempting the 1575 again. Okay, and as long as our RSI line is above 50, then we should start seeing more bounces to the upside. CTC is still very much blue across the board. We have the blue red arrow at the moment on our hourly. However, we're not trading. The moment price gets below this 1567 with a momentum, nice bearish candle, then it might be telling you that we should be looking for further downside pressure. And if this is generally a high here, for example, and this is our low, you can do a fib retracement area, and you can see that the 23.6 fib extension mark retracement bang on 1565 again. So that would be our first target. Well, break of that area there, we clearly see first target here at 38.2 at 1560. 50% back towards the institution moving average. If you get back below the institution moving average, 61.8 would be our next target, followed by the 78.6, and then a real move to the downside towards 15400 again. Okay, so if you see price pulling back and it's still above this area here at 1565, 1567, and the RSI is still above 50, then we should be looking for a potential bounce to the upside, a corrective bounce back up towards and reattempt of these areas over here. If, however, going into the US session this afternoon and price is trading lower than this area here at 1565 and RSI back below the 50, then ultimately we should be looking for first potential targets down here towards 1560, and then back towards 50% line at our institution moving average here at roughly around the 15.56 mark. Into the US dollar Swiss franc, good old Swissy. This pair over here, guys, we've seen a lot of momentum to the upside. However, one thing to really be aware of is that above us at the 1000 mark parity for this pair, we have a major support and resistance level, as well as that institution moving average on our weekly. Okay, so price heading into this area quite comfortably over the past couple of months, and you can quite clearly see we've had a major support and resistance level at this area. Yeah, through October, November, December of 29, through the latter part of 2010, resistance. So this is an area of clear resistance in the past. So if price is moving higher and breaking these prior resistance levels to the upside here, you can quite clearly see the resistance level, breakout, the pullback, and then a continuation higher. This is going to be our ultimate target here at 1000. Last week, a very indecisive week, a doji, and followed by this week, a clear doji yet again as we're heading into this resistance level, guys. So we could be seeing a change from a lot of buying into one of consolidativeness as we head into this major resistance level above us. Just bring up the daily just to show you that. Look at the past week of this pair. I don't know if I can put plots. Yeah, there we go. So that is our 1000 above us. Okay, that's the major weekly support and resistance level. Quite clearly see resistance and support in the past year, and you can see that will definitely be our target. Notice the institution moving average since October, November of last year, price trading above it, and as long as price trades above us, then ultimately the sentiment is still going to be looking higher. Sure enough, we did. We saw price testing a prior resistance level high here, the January high, for example, coming unstuck over here, very indecisive over a full month, and then breaking higher and breaking these highs over here, and now spending more time above that. However, going into this week, we've seen a lot of indecision. Look at these wicks on the US dollar, US dollar Swiss franc, very indecisive. Okay, seems to be more at the lower end of these wicks, so it's telling you that there's negative exhaustion in this. Okay, however, you can still see it's not trading in lower since then. We've had 1, 2, 3, 4 consecutive negative candles, but none of them really moving lower. Yesterday, very indecisive at the spot over here. However, all this taking place above a prior resistance level. Here's a prior resistance level here. Okay, this evening star formation, moving higher, indecision, moving lower. Okay, at 975. Price finding a bit of resistance before at this level, and now for the first time we've seen price finding support above this area. And as long as support is being found over here and price is still trading above this area, then ultimately we could see these highs here at 985, 990 being retested. Even though we're seeing a lot of indecision, if this is to be clear indecision or changing of hands between a bullish to now a bearish stance, then we want to see this 975 being broken. Okay, we want to see price generally breaking that with a nice bearish engulfing candle. And if that's the case, then we should be targeting prices to the downside. Okay, and if you look at the fib projection on this particular pair, there you go, 61.8, clearly a resistance area. Notice 50% line now, price spending more time below the 50% line. If that's the case and we see a bearish engulfing here, then it would initially take us down towards the 38.2 at here at 970, which happened to be prior resistance area here. Break of that, we should see price heading back towards that major support and resistance level at 960, which we saw a couple months back as a resistance level, as our second target. Okay, so we must get a bearish engulfing candle here. That'll be our first target down here at 960s, and then ultimately break below that area here, would see price reverting towards this area down here, which happened to be the prior support and resistance level in the past at the 9400 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly on this pair. Moving lower after finding further resistance at the 80 mark. Clearly you can quite see on the weekly time frame this resistance level. And you can see here, if I just pan out, a lot of support for this pair through October, November, December of 2010 through January, February, March, April, May, June, July of 2011, finding support for this pair. Okay, so this becomes a major support and resistance level. Price trading and finding resistance even after 2 consecutive interventions, candles here from the Japanese government, which failed to materialize, and a nice clear breakout above this area going into the latter part of February of this year. However, price failing to really generate any further upside movement on this because we traded into another major resistance level in the past, support and resistance level in the shape of the 8400 mark, and was capped. Price was capped by that 8400, and then price reverted to the downside. However, not finding support in this area here through May, and in doing so finding further resistance and trading at the underside of a major support and resistance level, and the CTC remaining red on either side to confirm that this breakout of here wasn't genuinely breaking up with true sentiments behind it. And sure enough, it faded into further consolidation. So you can see there's a consolidative range between the 76 and the 80, guys, like we had between the 80 and the 84 for a number of months. Okay, so now price is trading below the 80 now. It should be now looking for further bearish sentiment, because as long as trading below a major resistance level, then ultimately price is just going to fall lower, and it's going to fall lower to price support and resistance levels. There is a slight one here, consolidation one here at 78. You can see the range here through August, September, October, November, December, January, February of this year in particular, you can quickly, and last year, price was bound in this range. We saw the breakout here in February of this year. So target now would be 7800 on our daily and intraday targets. Okay, so just going to make a note of that. Get rid of all this junk over here. Plot that in there. Make that a nice dotted line, so you can quickly see. So if I take all that information now and plot it on my daily, okay, so 7800 below us, there we go. You can see price support and resistance at this area here in the past, and we know that because it's a major support and resistance on our time frames. There we go. Now I'll also make a note of the 80, because that's a major support and resistance above us, a major one, so I'll make that nice and thick. Okay, so I'm aware of these resistance and support areas. Now you can quite clearly see now to the downside, and we know that 76 also a major support and resistance level, the ultimate low for this US dollar Japanese yen pair, so that becomes a strong one too. Okay, so you can see quite clearly now, since April or the start of May, price spending more time below the 80, so this was a major resistance level. We had a breakout recently. Okay, everything was in favor. We had a breakout, blue. Oh, hold on, still red on either side. For this to become blue again, we wanted to see price now finding support, which we did, and then moving higher. No, that failed to materialize because we had this bearish engulfing candle, taking away all this hard work of breaking above this major support and resistance level. And doing so, price reverted to the underside, moving higher, but still capped by this 80 mark, which is the resistance level. Then went into a spinning top, then the bearish engulfing, which was our trigger candle telling us that we were now looking favorable downside. Then it moved lower, pulled back, and then continuation downside. Breaking below the institution moving average now. Okay, and as long as it's trading below an institution, we should be looking for negative sentiment. Okay, sure enough, breaking, consolidating, continuation. So breakout, pullback, continuation in the direction of the breakout. You can quickly see the lower swings now on the daily are showing momentum downside. And you look at last night's trading range, the US dollar is still hugging the lower end of this candle, so it's telling us that sentiment is still looking genuinely negative. So if this happens, we should be looking ultimately back down towards 78 as our first target. End of story. Okay, we're not effing and wiring and should we, shouldn't we? We should be looking now to our 4-hour charts to look for consolidative breakouts. You can quite clearly see here at the 78.50, you see a consolidation, support, price not trading lower than that over that time frame. Yes, trading lower, don't get me wrong, but not closing lower. So it's now forming a nice support here. Okay, and as long as it finds a support here, then we could see potential for price to bounce. If it does bounce, then it could bounce to prior swing here on a 4-hour, which happened to be this candle high at 78.80. It's capped by that plus the 20 period moving average. So if you see a physical bounce here, then on your smaller time frames, your 5 and 15, we could see buying sentiment or buying opportunities into this area here at 78.80, where you would take profit. Okay, because it's still negative sentiment, price is still swinging lower. Okay, this is where you can capitalize on any correctional move against the overall move in the direction. You can see the overall move is negative, but you can still particularly take profit in these bounces. Okay, but just be aware of where it's likely to take profit from, and take your profit when it presents itself. Don't there again speculate, I'll just hang around, I'll hang another 5 minutes, 10 minutes, etc. Take it and run. Okay, because you're trading against the overall market, and in this case is very negative. Okay, so if you're looking to get an entry to this, because we should still be looking for downside moving towards at least the 7800 mark, then look for a physical close. Okay, very indecisive candles here. We want to see a nice bearish engulfing candle lower than this area here. At least you can see the lows up here on a 4-hour. Be patient, guys. We have patience. Okay, it's only those that are patient who wait for confirmation from the market. Those are the ones that are profitable. Yes, you're giving a bit of that momentum back to the market. You're going to think, well, hold on, Chris, I'm losing quite a lot of potential profit here, but you're not going to be the one thing that you've got to be aware of here is you're not going to be faked into any trades. Okay, we don't want this to occur. We don't want to be faked into an upside move or faked into a downside move only for price to go against you. Okay, we want to, because this breakout over here, if anybody traded this without waiting for this candle to close, would have been faked into this only for price to go against you. Same here. If you're looking at this going, shit, this is going higher, excuse my French, you would have got into it moving higher, but then price is moving to a major resistance level above you at 800, because we know 800 is a major support and resistance level. If you're buying into a major resistance, it's not going to happen. You know, the likelihood of price reverting against you is so strong. It's 100%, 98.99999% going to happen. It's going to go against you. Okay, so we want to see the market give us a genuine sell candle is what we're looking for now, because weekly and daily are showing a negative long term. So that's got to continue. That's got to filter through on our shorter term time frames, our intraday time frames. So we're looking for a nice break below than that. If we don't see a break lower than that, then ultimately you're going to see price still consolidating here at 78.50. So break lower than this, nice bearish engulfing candle, very little wick, so more confirmation. Okay, the more wick, the more indecisive it is. Okay, just remember that the candle's going to be nice and juicy, long, very little wick on either side, telling us the sentiment is generally selling throughout that period. Okay, then we look for those profit targets down to the downside at 7,800. That's it, guys. That's how I trade. Okay, hourly 50% line. As long as price is trading below the 50% line, it's negative, and you can see the institution moving above price, so it is negative sentiment. Price is going to be trading above 50 for it to be positive sentiment. In this case, you can see we're trading sideways at 78.50. Price is now pulling back as price has been touching these, so that confirms yes. So that's fine, because you're going to see that as we head into support. Okay, RSI pulling back because it's not telling us that these attempts of the 78 are not genuine moves to the downside. We want a genuine move. That's what I'm looking for, guys. I told you we need to see a genuine breakout of 78.50 to tell us the sentiment is looking favorable downside. Until then, we stand aside. Okay, because it's going against everything that we've been taught to do. Okay, the CTC is telling us institution moving up to above prices is negative. Okay, the CTC remains red by a couple of days here. A couple of hours where price went blue. However, you'll be trading or potentially trading into a major price support and resistance level. Support. So 79.20 on our hourly chart becomes a major support and resistance level. If you're buying into this, you're not going to be winning, because you're still below the institution moving average on top of that. So you're buying against the overall sentiment, which is negative, and you're going to lose. End of story. You will lose. Bet my bottom dollar, you will lose. Okay, we don't want to be doing that. We don't want to be speculating. Okay, so this is how it's doing at the moment. Now, got to see a physical break lower than this and close lower. A nice juicy bearish candle for us to look for any further sentiment to the downside. That's it, guys. End of the week. End of my analysis. It's now 34 minutes in. I'm probably boring you guys to death, but I want you guys to get this. It's important that you guys get this. Because if you understand how to look at things and how to price things up, or how to look to manage things on a chart, it's just doing 90% of your work. Okay, so look at the news today, see if there's anything out there that's going to actually factor into price action movement today. Net borrowing costs, that's going to be a big one for sterling. It'll be interesting to see how many people are borrowing. And looking into in the US data this afternoon, what do we have? We have nothing for the US market. We have for CAD though, we have CPI month-to-month figures for Canada at 1:30 p.m. GMT. So make a note of that. And then we have the Euro group meetings, guys. We might have potential for the Eurozone finance ministers. They are getting together to try and apparently put together a bailout package for the Spanish economy. Ooh, that could be quite an interesting one. So all those parent loans, inverted commas, that we've seen recently for Spanish, I've always said they've always been bailout packages. They've stated loans. Yeah, it's just a pretty word. I think Spain is in a lot of trouble, like a lot of us traders think there is. So there's no getting away from it. They can call it what they want. It's still looking negative. But apparently, word is 10 a.m. GMT this morning, there's word that we could see the Eurozone finance ministers approve a Spanish bailout package. If that does, then we could see euro moving higher on that sentiment move. It is not pretty long term. Any one of you traders out there think that this is great long term. It isn't, because all this is going to be there's going to be a viable reason why Spain's going to pay this back, etc. Like Portugal, like Greece, like Ireland, all these things are going to be paid back. All these parallel bail-in packages is going to be some strict measures that these countries have to adhere to, and they'll be selling their souls to the devil, pretty much. So it is short-term knee-jerk reaction positive, but long-term sentiment negative in my eyes. Okay, that's it, guys. Hope you have a fantastic trading day, and have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.